Well, it's a good morning from me, and it's a good morning from him too. I hope everybody's well. Welcome to my mortgage live stream. I'm Paul Archer, but you know that already, so I don't need to introduce myself. Bank holiday last week, so we took a well-earned break. We went down to Cornwall actually for a few days, which was very lovely. Last bit of good weather, I think, because September's looking pretty miserable. New PM coming today. In fact, it may well be announced as we do our live stream, but it's all one political party, so I don't suppose there'll be too much differences to what they were doing before. But we'll see how that pans out and what they do with the costs of living, etc. Because I think that's going to affect the recession, how deep the recession is going to be, the mortgage market, of course, the housing market. So all these things get affected by that. And we'll talk about that next week as well. So for today, I want to finish off on my last two strategies with you on how to handle a recession or a downturn. And then I want to give you a few ideas about our new boot camp we've got coming up and a little insight into the Legal & General's most excellent piece of research they did on buyer behaviour when it comes to buying mortgages, particularly the younger generation as well. So that's coming up a little bit later. So first of all, let's give you those last two strategies for handling a recession. And remember, this is important because we are going to go into a downturn and you may not have experienced one. In fact, the last downturn was 2009, 2010. And many of you weren't even in the mortgage sector at that point. So it's difficult to know what's going to happen, but it will happen because it happens every single downturn. And I can give you a few ideas to help you with that one. So I'm going to go online because it would be the right thing to do. And hope you're all well. I mean, asked how you are. So that's pretty rude of me, isn't it? Hope all is good with you and you're enjoying your September. And the kids have gone back to school. That might be a relief for you as well. It might not be. It depends where you're coming from. Let's head over to the whiteboard and I'll talk about my strategies, shall we? Okay, let me talk about the last two strategies I've got for you to help with this downturn that we've got coming up. And there's two for you here now. So let me talk about my last two strategies to cope with this downturn. Yeah, downturn strategies is what we're looking at here. There you go. Now, the first one for you, or in fact, this is probably the seventh one if you're listening to the series here, is to develop yourself. That's a strategy. The first one is to self-develop yourself. Self-develop. There you go. Self-dev. What we like to call in our business the CPD, because we're fancy people and we're advisors, so we have to call everything by an acronym, don't we? Continued professional development is what it's about. So this is really important. During a downturn, during an economic downturn, when you may not be as busy as you felt you were like 6 months ago or a year ago, you need to use the downtime in order to develop yourself. Not only does this help for the future, but it also gives you a good inner game. You get to feel good about yourself and a positive mental attitude, which is important during a downturn. But we know about those things. And what I'm talking about really is to develop your mind, develop your skills. You can certainly get better at doing certain things that the job requires. Skills in selling, advising, prospecting, all those things you can certainly develop yourself in and get better at. There's a few things you might want to think about which can help you in your business, which will help you to diversify where you're going. Now, it may well be that you are a mortgage advisor, an MA or mortgage broker, whatever you like to call yourself. And that's great, and you've got good at that business and that's working for you. But one thing I'll talk about in a second is how you can develop your business. And to develop your business, you've got to get a number of qualifications and exams under your belt. So what I would always recommend, if you've got the time here, is you take a look, first of all, at the equity release marketplace. I've talked about that like forever, haven't I? And I'm not going to bang the drum again. But equity release is a key area which is not really recession affected, because people that you're lending to or giving money to, because you don't lend, do you? Don't have a job, they're not working, they're retired generally speaking. So, and of course they have a need for capital and lump sums. But you need the equity release exam. And there's a couple of those exams you can do. And that's one that's it's level 3, so it's not too challenging. So that's one that you do definitely want to pick up on. If you want to get good at protection, and I'm not talking about, a joint life mortgage protection policy with critical illness added on over 20 years. Not about that. That's dead simple, isn't it? In fact, that kind of business will be done automated anyway. I'm talking about the more complex protection, business protection, relevant insurance, limited companies, partnership protection, trusts, all the complexities. If you want to get into that area, then you've really got to seriously think about your protection exam as well. There's a couple of good ones you can choose, and that's ones that you should certainly go for as well, just to give you more confidence in the more complicated areas of the business that comes into it. The final one for you, and I would definitely suggest you do this for the long term as well, is the mortgage advisor's role is great, but a lot of it's been taken over by tech, and the banks, of course, are using their artificial intelligence apps. In fact, the Legal & General report, which I wanted to mention quickly, does talk about that in their excellent report, which you can download for free from L&G. They interviewed 1,000 buyers of mortgages during the pandemic, so 2021, that sort of era. 1,000 people they interviewed who bought mortgages, not houses, but mortgages. And the surprising results, they've got stats to prove it, is 60% of those people went straight to a lender. Now have a think about that. Okay, you may be a mortgage advisor for a lender, but I doubt it, because those people are going, less and less of those people being around, aren't they? So lenders, of course, still have that pull, and with their artificial intelligence, their engines, their apps, their tech, which they can afford to create, they will attract more and more people. So mortgage advisors, if you stick to that route and keep in like the vanilla mortgage areas, you will not have business in the future. So you definitely do need to segue over to the IFA side of things. We call it the IFA. They call it the level 4 exams. Now, this gives you the ability to become a wealth manager, pensions advisor, wealth advisor. Level 4, because it's higher than level 3, so you do need to think about that. A couple of routes you can take there, and it's definitely something to think about. They're harder because they're level 4 as opposed to level 3, but it's something you could do during the downturn. You need a good year or so, though, to do the level 4, because there's quite a few exams involved, quite a lot involved there. So have a think about it. Definitely one to think about, because that leads into an area which is not really affected by the recession. But let's get on to that next with my final tip for you. And we'll go for a different colour here. Now, my final tip for you is to think about diversifying your business. Diversify. There you go. Now, we know what that means. It means going into a business area that's not directly connected with what you do. Which is dangerous. I mean, a lot of people like to do completely different things to what they're trained and authorized to do, and that's okay. I get all that. But I'm talking about diversifying into different advice areas that might help your clients moving forward. Because good mortgage advisors, of course, closet their clients. You look after your clients, and your clients have different needs. And you may well refer your clients onto other people when you spot their other needs. You probably don't spot their other needs because you're so blinkered by the mortgage, or many advisors are. And they're so busy doing mortgages, because mortgages, there's an awful lot of paperwork and admin and hassle involved, a lot of work, a lot of stuff going on. So you do recognise needs, but you may not refer them. But you want to be looking at your clients more in the future, going back to see them, talk to them, closet them, really look after their needs. And to do that, you need to diversify. Now, there's a few places you can go. The first one, for you, a few ideas, is you might want to take a look at adverse borrowing. Now, that's very connected with what you currently do. Of course it is. But when I say adverse borrowing, we're talking about lending to people with a bit of a coffee stain on their credit report. More and more people get that during this recession, when unemployment starts kicking off and stuff like that. I know it's not nice, but it's a fact of life. So if you get yourself into the adverse side of things, we call it different things, don't we? It used to be called subprime in the day. It's called specialist lending now, and all sorts of different names for it. But it's generally people who struggle to borrow. So that might be an area that you might want to move into as well. Now, one you definitely do need to think about seriously is getting into development finance. There you go. Development finance. And you may already be in that world, and well done if you are. But if you're not, if you're focusing on remortgages and vanilla stuff, you probably find it quite complex. Now, we were watching Grand Designs last night, Shelley and I. Love Grand Designs. I'm Kevin McLeod, just like my hero. And there's this guy who was building this, it was a new build property, of course, in Manchester, in Hale, nice part of the world. And he was building this great big, I call it a monstrosity actually, but he loved it. Because as he was building it, he needed to finance it because he ran out of money, they always do. So he had to get some development finance. And he mentioned to Kevin that the interest rate was eye-wateringly high, and he had to have it repaid with a proper mortgage in a very short time period. Now, Shelley said to me, what's that all about? And I explained to her that the fact that development finance, bridging finance, requires those things. There's a 12-month window often. There's a lot more to it. Though bridging finance, seconds, whatever it is, development finance is the general term, allows people to buy old shacks, old properties, auctioned properties that wouldn't normally get a loan, a straightforward mortgage, if you like, so they can develop it and organise it. Now, in a recession, of course, builders get cheaper. They do. And they answer your phones as well. When you leave a message with a plumber, they actually return your call during a recession. They've had a good time the last 2 or 3 years, building firms, small building firms as well, especially. But they will start to feel the pinch. It's always the first sector that does. So building costs may come down, the actual materials, and the labour may come down. So there'll be a lot of people with money who are going to do these developments. But you might. I'm not asking you to do that. I'm talking about you finance them. Very different as well. So get yourself down the auction rooms, put your business card around. Look out for the site boards that are going up. People for sale, ex-commercial that's going to be for sale. Somebody will buy it and do it up, turn it into residential. So get your feelers out for that kind of business. Talk to estate agents who often have land or commercial property which they're trying to sell. See if you can get referrals for your business. But first of all, learn how to do development finance. And the best way to do that is just to lock onto a couple of decent BDMs for various firms. Like Alden Moore, like MT Finance, people like that. There's quite a lot of firms that where the BDMs understand that marketplace. So that's one thing to think about. We've talked about diversifying your business before. I've talked about equity release many times. We've talked about it over here. So think about that. 14 million baby boomers are retiring or have retired over the next few years. Baby boomers born up until 1965, thereabouts, really. They've got a hell of a lot of money in a pension, they've got a hell of a lot of money in a property, and they're retiring, and they may be thinking about equity release. It's a big marketplace, not really affected by recession, so definitely get yourself over to that sector. Definitely do that one as well. Now, when it comes to equity release, you may also want to think about retirement wealth planning. It's a huge area. Again, because somebody that's retiring with a big pension pot and a big property will want to talk about their options. Now, you're not allowed to talk about their pension options because you ain't licensed for it. But if you did get licensed for it over here, then, of course, that's something you could think about. I think that's a real growth area. All these baby boomers need help with their pensions. Some have got simple pensions. Some have got very complex pensions, savings, ISAs, property. They need to talk about how they can create an income, wealth, if you like, for when they retire. And that's a huge area now. It's not the funds under management thing, where you get a percent of the funds under management. It's okay, that's carrying on, but that's starting to dwindle now over the next few years. Be careful of that one. So you need to be giving advice to these people about their financial planning during retirement as well. So that's something to think about. There's some areas which you could diversify. Do all the usual things as well, like lasting powers of attorney, wills, that sort of thing. If you want to get involved in that area, definitely. Even driving taxis or cleaning windows if you want to. But I'm not suggesting you do that. I'm suggesting you diversify into areas which can actually help you. But sometimes you've got to get yourself some exams to get there as well. So there, end of my strategies to handle a downturn. I hope you found that useful. Bye. Alrighty, was that okay, was it? Let's just pop back over here, shall we? Okay, I mentioned about the Legal and General reports there, which you want to download because it's really, really interesting. It's one of the most interesting things I've read, and I read a lot in the sector. The most interesting things I've read in the whole marketplace in the last 3, 4, 5 years. It's fantastic because they've interviewed 1,000 buyers of mortgages, and there's some great percentages of what they do. It really proves that buyers go through a buying process before they come to you for a mortgage, the mortgage broker, sort of things they do, how they research, what they get up to. You'll be able to track this and know where your buyers are, so it will certainly improve your prospecting. And during a downturn, you do need to prospect. You can't just wait for that phone to ring or the email inbox to fill with inquiries. You've got to get out there and start prospecting. So the more you understand how buyers buy mortgages, modern buyers that is, the better you're going to get at prospecting. So I'll do a video on it probably in a couple of weeks' time, but definitely download it, Google it, download it. It's certainly well worth a read if you find yourself a bit of spare time. Okay, let's just finish off then today, and let's finish off with our autumnal live streams here today. I'll talk about our new boot camp, but I'm going to head back over to the whiteboard for this one because I want to share with you a couple of images on this one. So let's just take this out, shall we? There you go. So we can clear the board nicely. Now, for those of you who are thinking of your CMAPs, or you've got colleagues or friends that are looking for their CMAP, or you may run a business where you want to get people up to speed with CMAP, you might want to think about our new bootcamp because we've refreshed it, redesigned it, and we're ready to launch this for the autumn. So it's the all-new bootcamp 2022, as we call it. Now, our bootcamp, as you know, it's our sort of word for it, is our online, on-demand way of learning CMAP. Doesn't involve a classroom, with the mints and the cordials in the corner and the frosty old trainer at the front reading a textbook at you. We don't do that anymore. It's a thing of the past, although many providers do. And I get that's fine. As a corporate, you may well know that model because it's the only model you've ever used, but you might want to think about this for your people moving forward. There's loads and loads and loads of features with our bootcamp. First of all, just write a few down now, it's self-paced. So, you can pace yourself for as long or short as you want. And we've got a few ideas to help you with that one. It's all on demand. So you go on demand and you study when you want to. You don't have to rock up at a classroom at a certain time. There's loads and loads of video and audio. Now, the video is typically me with the whiteboard, describing things in a visual way, going through all aspects of the syllabus with you. The audio is recordings that you can listen to at your own leisure. There's no essential reading. Obviously, there's the textbook, the LIBF. There's no essential reading or text on the screen or anything like that. This is video. This is very multimedia. You can have it on any device you like. It works on all devices, whatever you choose to use. That's really important as well, isn't it, when it comes to it? It's very structured. In other words, you have a start, middle, and an end. All the lessons are structured according to the syllabus. So if you cover everything in the right order, you'll cover everything you need to as well. A few other things for you, squeeze one down here for you. There's plenty of tests and multiple choice tests built into the system. So you get plenty of tests. You don't need to buy any more of those. Got loads of examples, questions for you as well. We also have a subscription version, a sub version, where you can just pay monthly rather than one-off, which is pretty innovative into your Netflix style of operating as well. There's lots of help at hand as well. Lots of help. There's Ask the Tutor. So you can ask the tutor questions via email. They'll come back to you. There's the weekly Q&A live that we do on Vimeo or Facebook. So that comes on Monday night for half an hour where we answer all your questions as well. We update it weekly as well. Not a lot of people do that. We update our bootcamp weekly with new videos, new refreshing things, because we don't wait till syllabus changes, because your client isn't going to ask you, when is it changing? You need to know the changes. You need to know things are happening all the time. So that's really, it's relatable, it's current. We give you relevant examples with the videos as well. So we bring it to life. We teach you how to do the job. That's not just pass exam. You've got to do the job. You've got to become a mortgage advisor. So we teach you how to do that. That's really important. There's loads of other things in there. There's the revision guides, PDFs that you can download and read. There's the audios that we add in as well for you. It's a great platform. It works really well. Thinkific has an app this autumn, and it really is smooth and simple and works really well. Lots and lots of features, if you like. What we've done for the new bootcamp is we're going to help you now with how long it takes. A lot of people say to me, look, Paul, how long does it take to get my CMAPs out of the way? And my answer is really, well, it depends. Of course, it always depends, isn't it, on how good you are and what you get up to. And that's a bit sort of nonsense, really. It is on demand, it's self-paced, so people can take as long as they like. We did have a cohort system which worked very well during the pandemic, but we've moved now into what we call set your pace. So let's put this in red, shall we? We call it set your pace. Now remember, with boot camp, you do get 12 months access. So when you sign up for it, not the monthly subscription version, of course, when you sign up for it, we give you 12 months access to the boot camp. Now that's more than enough for most people to get 1, 2, and 3. So you need to decide to set your pace. So how do you do this? Well, first of all, you need to decide how long you're going to want to take. Do you want to be able to go fast track or slow? And we call it, we've got 3, we've got run, we've got jog, and we've got the walk. It's just the pace thing, isn't it? Yeah. Are you going to be sprinting or running? In other words, do you want to get it done really quickly? Are you going to be jogging quite happily without too much pressure? Or are you going to take a nice leisurely walk? And that depends really on how much time you've got per week to give. Now with the running one, we suggest it can take you a month. So that's 1 month, which is pretty exciting, isn't it? 1 month to get the whole CMAT 1, 2, 3 out of the way. That's your fast track, that's your sprinting. But if you want to do that, you've got to give 30 hours a week. 30 hours per week. I'll sneak that in for you. Now that's tough going. That's tough going. Now, a lot of people like to attend these week or 2 week training courses. They call them fast tracks. A lot of the providers do them, where you rock up at a classroom at 9 o'clock and you listen to a trainer talking to you all day, and on the Friday you take the exam. Now that's called a crash course. That kind of like just shoves everything in you. You hopefully remember it all, and you take the exam. You don't remember much afterwards, and when you come to do the job, you've forgotten everything. But that's called crash coursing, and many people like that, and you can understand why. So if you want to get the whole CMAT done in a month, that's the best we can do. Remember, we're teaching you how to do the job. We're actually helping you to understand the topic, enjoy the topic, actually get to grips with the topic before you become a mortgage advisor. And that's 30 hours a week. So if you're working full time, you will struggle to do that. You might think you can do it, but you can't do that for 4.5 weeks over a month. It will just exhaust you. 30 hours is quite a long time to give. But if you're not working, say for example you're on a sabbatical, or you've finished one job and you're just about to get a new job as a mortgage advisor, you can get the whole thing done in a month if you really go for it. And we give you a schedule which you can download, and it has all the weeks on it and how many lessons you need to do each week, so you can tick it all off and have a great schedule. So that's the running one. That is the first set your pace. Now the jogging one was going to take you 2 months. Now, again, we've done the maths for you. The 2-month one requires 15 hours per week. Now, that's a bit more doable, if you think about it, because you've got 15 hours a week. I mean, that's 2 hours a day. Even if you're working full time, if you're really motivated, you could do that, but you'd have to work quite hard and not give it up or not have any time off. So it's a little bit hard. Maybe if you're working part-time or you've got other commitments, you might be able to do the job. And that means getting all the CMAP done in 2 months, which is pretty good. Now, the walking pace, our most popular one, this is for people who are working full-time somewhere else. Because we've all got to pay the bills, especially big bills come this autumn with the cost of living going up, of course. And if you're working full-time, you may have to travel or not, but you'll get home and you'll be exhausted. So you won't be able to do a lot of time. So what we suggest here is that this particular version takes 4 months. Again, you can do the maths. You want to do that for you. We recommend 8 hours per week. Now that's a bit more doable, that 8 hours. This, by the way, is the most popular one. Let's bring that for you. 8 hours a week is doable. That's kind of like an hour a day if you want to go there. You might want to do 2 hours on Saturday morning, 2 hours on Sunday morning, and maybe sort of an hour one or two evenings after work. Weekends, you might want to do 4 hours on a Saturday if you've got spare time and it's raining. It's doable if you're working full-time somewhere else. But the whole point is, though, is you do it every week. You do little bits of learning. You watch the videos, you listen to the audios, do some reading, do some tests, follow the structure. You don't need to worry about the structure. We do it all for you, you see. And that's why boot camp's really, really popular. And the other last thing for you is we're keeping the price as is. We're not increasing prices. People do. Inflation's affecting everybody because our learning is all online. Online, of course, has its certain cap on our costs. We don't have to hire hotels or bring in food or get you to travel. Petrol, diesel, all those costs, of course, are going up. So online learning can remain competitive, and we're keeping our prices frozen for this year, which I think is a really good thing to do. And at $399 for the full CMAP, including VAT, that's darn good value. That is good value, actually, because our job here is to help as many people get their CMAPs done and then launch them into the career that's going to serve them well moving forward. That's what we do. And if you're a corporate, in other words, if you've got a lot of people you want to train on CMAP, think seriously about those classroom courses that you run at the moment, because you always have done. And think about this sort of thing, which can actually help you to get your people through. You just have to do the maths on this. You could get your people just online learning without even having to worry about a classroom. It's much more cost effective for you as well. And you might want to be thinking about that if you're looking at cutbacks. Anyway, that's the new bootcamp 2022. We're really excited about it, and I hope you are too. Bye. Alrighty. So we've got on about 25 minutes now on this live stream. Time to wrap up, I think, don't you? Time to wrap up and enjoy the rest of your week. We'll probably heard who the new PM is, but we'll see how that pans out. Will we do a live stream on it next week? Probably not, because everybody else is, aren't they? They're not going to change an awful lot in the mortgage market unless, of course, Rishi gets in and does know a stamp duty embargo, which he did brilliantly back in 2020, didn't he? Which helped out things enormously. I think actually he's just accelerated house prices more than they should have been anyway. Kept a lot of brokers busy. But we'll see. We'll see what happens. Have a great week. Enjoy yourselves, and I'll see you next week. Bye for now. There you go.